I have seen a lot of traders getting stopped out on their trades. Many people believe that their broker's hunting their stop. Maybe they believe that everybody's trading against them and they just don't seem to make trading work. And in this video, I have compiled a very important lesson. We're going to take a look at liquidity runs, what is a stop running, and a lot of other important concepts that you have to know about to trade successfully. So we're going to start very simply and then progress to our more advanced concepts such as liquidity runs, stop runs, and broker stop hunting. So when you look at this, ask yourself, is this a strong downtrend? Is it weak? What is happening here? And the first thing that you always look for is the high and the low structure. Previously, the market was making lower highs and lower lows without exception until here. This is the first time that the market is making a higher low, and here as well. And this is the first time the market made a higher high. So far, so good. So something is changing here, but obviously not enough yet. We add a 50-period moving average, which will come in back handy later. And a moving average is basically a trend filter used by a lot of professionals. It's also used by a lot of automated and algorithmic trading strategies because it's a very objective tool and easy to program. We'll keep that in mind for later. Also, we have a resistance area, and this seems to put the price into a box. And in a downtrend, we call those boxes when they occur with a potential structural change here. We call it a accumulation zone. So probably a lot of people who have been trading short here are thinking about taking profits. Maybe they are taking profits. And a lot of people who wanted to buy previously and the price was too high now are probably considering buying because the price is low enough and more interesting to buy. So the people who are short are getting out, which is bullish, and the people who wanted to trade bullish are now getting into, which is obviously also bullish. So a lot of bullish pressure is building here. And in those accumulation zones, if they happen in the right context, you will often see a very strong breakout signal, and then this is often indicating a new trending phase. However, there's a caveat. So we see the breakout, and probably a lot of traders are getting on this breakout signal, right? So probably here or here you get long, and where do you put your stop loss? Probably underneath here, or maybe until here under the last swing point. So we can identify this area as a pockets or a block of stops. So a stop pocket or a liquidity area, whatever you want to call it, doesn't matter. There are a lot of fancy names, but all you need to know is and ask yourself, where would a breakout trader put their stop loss? In general, it's always a good idea to ask yourself to understand market behavior. Where do people put their stops? So somewhere in here, breakout traders have stops. And what is very common then to free up this liquidity is we see a stop run. The market is trading all the way back below this low. You can see it here. The price makes it below the low and then turns around. So it's taking out all of those stops here to free up liquidity. And you can see that the market is shortly back here above or right at this previous resistance above this flip zone. So those stop runs and those dirty retests, liquidity runs, whatever you want to call it, they can be strategies in and of itself. If maybe you don't like breakouts for whatever reason, or you just want to focus and specialize into those liquidity runs, stop runs, look for breakouts and then ask yourself, where are potential stop pockets? And that could be a clue for where to find trades. Afterwards, you can see the market really nicely rallied higher from this stop run. And what can we see now? Another stop run, where in this example, if you trade a continuation breakout, maybe you get in here or here, where's your stop loss? Somewhere in this area. Or maybe you are taking a re-entry here, maybe you took the liquidity run here, you are in a bullish position maybe here, then as the market moves higher, you're going to move your stop loss along with it, right? So probably a lot of stops are clustered here again. The market takes out all the stops. And that one thing is very important is that we never trade those liquidity runs or stop pockets blindly, because there is a chance that the market may reverse lower and just keep going. However, it is important to wait. Can we really see a reaction out of this pocket? And you can see just waiting one candle confirmed that yes, there was a lot of liquidity freed up. We are still trading here in the direction of a potential accumulation zone, and that is then where you see this huge turnaround. So a great confirmation that something significant has happened here in this liquidity pocket. And shortly after, you can see the market is moving higher, and higher. A lot of traders are now going to be very frustrated because they have missed this trend. Maybe you were right at anticipating the trend direction. Maybe you saw the signals coming, but the breakout didn't work out, and you blame your broker. Maybe you think it's insider trading, the banks are against you, but I would say it is neither of that. It is nobody's going against you. It's just a natural way the market moves, and your job as a trader is to just identify that. And if breakouts don't seem to work for you, but you're able to anticipate the direction correctly, it is time to think about changing your trading strategy and maybe going from a breakout approach to a pullback, a dirty retest approach. So I hope this helps in a way, and let me know in the comments below.